This one SMC trading strategy I'm about to share with you could genuinely make you a profitable trader if you just follow along. In this video, I will provide a step-by-step trading plan on how to execute this trading strategy. I'll demonstrate a live example of a trade I took using this exact strategy last Friday. To silence the skeptics, here's a screenshot of before the trade was taken, which I shared with my community. You can see my order block mapped out and my instructions. Run on sell side means wait for lower prices. LTF confirmation is lower time frame confirmation, which is my entry model, and then longs into buy side, targeting the buy side liquidity and holding partials for swings. This essentially means wait for the price to dip into our gray box, wait for our entry model, and then take longs into our target. It's straightforward. I provided the game plan before the trade, and it played out. But first, let's walk through every step to understand this strategy from beginner to advanced. There are 5 steps in total, beginning with step 1, which is directional bias. The question behind directional bias is, where is the market heading next? We have a diagram here, starting with theory before diving into the practical at the end of the video. If you find this high-value, free content helpful, please like the video and subscribe to the channel to show your appreciation. Let's dive in. So, for step number 1, we need to establish the directional bias. It's very simple. We want to know where the market is heading, and we determine this through market structure. We're demonstrating a theoretical framework of market structure, focusing on the most recent low and high. This gives you your trading range, where prices range between low and high. Hypothetically, if you don't know whether we're bullish or bearish, you wait with your high and low mapped out. Draw a box across these points and wait for a breakout of your trading range. Everything inside this gray box is internal until we break out. We have our external low and high, and breaking out to the upside clearly indicates a bullish break of structure. This tells us to look for longs. Thus, with a low, high, higher low, and higher high, we are bullish and looking to long the market. That's how we establish our directional bias, by identifying these external swing points of market structure. If they're making higher highs and higher lows, the price will likely trade higher, and we focus on longing. So, step number 1 is determining if we are looking to long or short. Step number 2 involves identifying areas of liquidity within your trading range. Bear with me, it's quite simple. After establishing that we are bullish and looking for longs, we identify our protected swing low, the low that broke the previous high and put in this high and our weak high. Knowing we want to long above this low and sell above this weak high, we now need to identify key areas of liquidity within this trading range to avoid at all costs. The most common forms of liquidity are equal lows, equal highs, Asia session high, Asia session low, or old highs and old lows. These are likely stop-loss areas. For example, we have the Asia session range in blue, which I love using for liquidity. We mark out the Asia session range high and low as pockets of liquidity, along with old highs and equal lows. Liquidity represents money, including stop losses, take profits, and entries. When triggered, these orders bring money into the market. Traders place stop losses at trend lines, equal lows/highs, time-based highs, external swing highs, etc. This internal structure shows how different traders see different things and place their stop losses, entries, and take profits, creating liquidity. We aim to wait for everyone to be taken out of the market. For instance, with step 2, we are pro-trend, looking to long, targeting sell-side liquidity first and buy-side liquidity next. Step number 3 involves identifying order blocks or key areas of supply and demand. Order blocks highlight where smart money is involved. We use the same framework: directional bias, bullish, liquidity points, and identifying an order block. This is usually a sell to buy candle that led to the break of structure, positioned below the liquidity area. This is our order block, where we expect significant orders. An order block acts as a roadblock as sellers come into the market. They meet demand and fail to push through, causing price to shoot up. Step number 4 is the trading strategy, explaining how to enter and exit with money. We combine the first 3 steps into the trading strategy, demonstrating this on the 15-minute and 1-minute time frames. Step 1 is establishing directional bias, bullish. Step 2 is identifying liquidity, and step 3 is pinpointing the order block. In step 4, we wait for a run on liquidity, price to reach our order block, and then a shift in lower time frame, 1 minute from bearish to bullish. This confirms significant orders in our order block. We then enter at this level and target the liquidity areas for take profits. Let's apply all of this to the actual chart. Here, on the 15-minute time frame, Euro-dollar, Friday 24th of May. Initially, the chart looks plain, but you'll understand soon. Step 1 is understanding market structure. This swing high and swing low form our trading range, confirming we're bullish with a break of structure to the upside. Step 2 involves identifying liquidity pockets, targeted highs, trend lines indicating liquidity, old highs/lows, and session highs/lows. Step 3 is identifying our order block, which is the final sell to buy candle before the break of structure. This level, where there was an aggressive sell before price shot up, acts as our order block. To summarize, step 1 is our bullish directional bias. Step 2 maps out liquidity, and step 3 identifies our order block. We wait for a liquidity run and price to enter the order block. Then, we look for lower time frame confirmation to enter the trade and target liquidity levels. This comprehensive strategy combines theory and practical application for successful trading.